Hello friends. A lot of you must have already set up mutual fund investments for your child's college education or marriage. If that is the case, you're a good parent. Congrats, all good. But are you doing it in your name or your child's name? Now, why am I asking this question? Is there a difference? That's what we're going to check out in this video. Welcome to Aarti's Tax Info. Now, what is the relevance of that question? If you're investing into an equity mutual fund, all good, doesn't make a difference if you're doing it in your name or your child's name. Whatever gains arise, it will be taxed as long-term capital gains at 10%. If it's a bond-based mutual fund, whatever gains arise will be clubbed to your income. So naturally, as a parent, you will be at the highest tax bracket, that is 30%. And your child, when he or she turns major, normally they wouldn't be having an income at 18 or 20. So the gains arising out of a fund in their name will attract less tax or no tax at all.
Now let's take two examples to make this clearer for you. The first one is the SIP route and the second one is the lump sum route. So the child here is 10 years old and the parent is earning a salary income of 10 lakhs per annum. So if you look at the tables, there are two tables here. From the first table, we are calculating the net gains arising out of SIP, and from the second table, we are calculating the total family income. That is the income that the family gets to take home after tax. So if you look at the first table, the parent is having a salary of 10 lakhs per annum and he's investing in SIP of 10,000 per month in his name, in a folio under his name. I'll go slow here so that the calculations are clearer for you. Please pay attention and please be with me. The SIP is giving a return of 12% per annum, and after 8 years, that is when the child is turning 18, the maturity amount comes to 16,15,266 rupees. So the total gains would be 6,55,266. Now, what is the taxable income in the name of the parent? It will be 10 lakh salary plus this gains of SIP of 6,55,266. So it comes to a total of 16,55,266. And the tax payable out of this will be 2,04,442. So the net gains arising out of SIP, that is the 6,55,266 minus 2,04,442 will come to 4,50,824. So if we come down, the total family income will be, in the second table I'm saying, the total family income will be 10 lakh salary of the parent. The child has no salary even after 8 years, he's just turned 18, there is no salary for him. The net gains from SIP is 4,50,824 as you can see in the above table, the top table. So the total family income after tax will be 10 lakhs plus this net gain of 4,50,824. The total comes to 14,50,824. So this is the case A, where the investment is in the name of the parent. So let's take the next case where the investment is in the name of the child. The parent has opened a folio in the child's name and the investment is done through his name. It's the same SIP of 10,000 rupees per month for 8 years. So the amount invested remains the same, 9,60,000 over a period of 8 years. The maturity amount is also the same, assuming 12% return per annum. It comes to 16,15,266. The net gains also obviously the same, 6,55,266. The difference comes here. The total taxable income in the name of the child will only come to 6,55,266 as he has no other income. So as this is less than the taxable limit, the tax payable out of the SIP gains will be zero. So the net gains from SIP will be 6,55,266. Now let's come down to the second table. The family income remains the same, 10 lakh salary for the parent. Child obviously has no income, and the net gains from SIP is 6,55,256 as you can see in the above table. Now the column below this, the row below this, tax on parent's income of 62,400. What is that? The parent is earning a salary income of 10 lakhs, so obviously there will be a tax on that. So this 62,400 is the tax on 10 lakh salary income. So if you reduce this from the total family income, the take home family income will be 15,92,856 rupees. So as you can see, there is a difference of about 1,50,000 extra. So this 1,50,000 rupees extra is what you can use for your child's education, child's college education. Now the tax rates taken in this example is the current new tax regime tax rates for ease of understanding and calculation. I hope this is clear. Now let's get to the second example where the route taken is lump sum route. So in the first case, the parent is investing in his name. The salary is 10 lakhs. The amount invested is a lump sum of 10 lakhs. At a maturity amount of 12% per annum, the total amount comes to 24 lakh 75,963. So the gains will be 14 lakh 75,963. The total taxable income will come to 24 lakh 75,963. Now this is not to be confused with the maturity amount. The calculation, as you can see, I've given a separate column indicating A, B, etc. So the A is salary income of 10 lakhs, B is the gains arising out of the lump sum investment. So this 10 lakh plus 14 lakh 75,963. That is the total taxable income of 24 lakh 75,963. So the total tax liability comes to 4 lakh 60,499. So if you reduce this 4 lakh 60,499 from the gains from lump sum investment, the net gain from lump sum investment comes to 10 lakh 15,464. Now let's come to the table below. The total family income after tax. The family income is 10 lakhs salary for the parent, no salary for the child. Net gain arising out of lump sum will be 10 lakh 15,464. So the total family income, take home family income will be 20 lakh 15,464. Now let's get to the second case where the investment is done in a folio under the child's name. So the salary income of the child is 0. The amount invested is 10 lakhs. The maturity amount at 12% per annum comes to 24 lakh 75,963. Net gains is also 14 lakh 75,963. Now here again the total taxable income in the child's name, as the folio is under the child's name, the taxable income is only the gains arising out of SIP. I mean lump sum, sorry. So the total taxable income will be 14 lakh 75,963. The tax on this will be 1 lakh 50,999. So the net gains arising out of a lump sum investment after tax will be 13 lakh 24,964. Now let's come to the second table. The total family income will be parent salary of 10 lakhs, child has no income other than lump sum. Net gain from lump sum will come to 13 lakh 24,964. And again the 62,400 things comes. What is that? That is the tax payable on the salary of 10 lakhs. So we reduce that from the total amount, total income of the family, and the net family income after tax will be 22 lakh 62,564. So if you see here also there is an increased amount of 2 lakh 50,000. This 2 lakh 50,000 extra can be used for a child's better education, child's college education. So there is an evident gain in both the cases where you choose to have the investment under your child's name. So what are the other benefits if you do this? Is tax savings the only benefit? No. If you are investing in a folio under your child's name, you'll have to obviously open a bank account in his name and route the investment through that bank account. So what are you showing your child? What are you teaching your child? You're showing your child that savings are an integral part of life if you want to have a proper, secure financial future. And apart from this, the other major important thing, which is an advantage if you choose this route, is that generally what happens is, when as a parent that you have an investment in your name, when an emergency comes, there is always a tendency to redeem the investment, to break the investment, redeem it and use it for purely unnecessary stuff. Sometimes it may be an actual emergency. Sometimes you might be tempted to invest in a new house. You might be tempted to get a new car. But generally, if an investment is in a child's name, there is an emotional angle to it. You think several times before breaking that investment. So that way you are ensuring that your child has a safe, secure future. So hope you got to learn something from this video. Please make use of it. And please subscribe to our channel for more such videos and information. I'll see you in the next video. Thank you.